All right. Hello, everyone. All right. Hello, everyone. This is going to be a lesson on trade management. Specifically, how to overcome common obstacles that traders, especially new traders, face whenever they're scalping or in a day trading scenario, or even when you're in a position like a swing trade or, any trade that you're trying to actively manage. It's execution that fucks up 90% of trades, which is why things like, I can share the strategies I use, the under overs and over unders, things like that. My concepts with open interest and how I personally view it, liquidity, accumulation, distribution. I can share pretty much everything I do, but the one thing you can't replicate is the execution. And that's why it's not like when you hear people bragging about sharing alpha, and like even me from time to time, I will share stuff that is legit very, very useful alpha, but even in the back of my mind I always know that without execution it doesn't mean anything. So what would that mean for you as a trader? Well, break it down into 5 parts, which I have here. So executing the actual trade, where to enter and how to enter. So when you've got your system, which says I enter on an under over, let's say. So you enter with breakdown, breaks the high that led to it, and then you enter here on the retest of this low. You enter somewhere in this area. So the execution part is both the where and how to enter that. Okay. Then we'll cover in-trade management. So things like when to move your stop loss. One of the biggest mistakes traders make is moving their stop loss too soon. So, they get into a trade here, stop loss below that wick, it starts to move for them, and they immediately move their stop loss up to here. Price reverses, wicks them out, and goes in the intended direction. I'll show you when you should move your stop loss up. Talk about when to cut a trade. Cutting trades is more important as a scalper and day trader than actually, nailing entries. It's not about nailing the perfect entry. It's about getting the right R, so as in the right reward for your risk. You don't have to nail an entry if price moves. If that's one move, and you get in here, and you get out here, and your stop loss is there. Let's just really quickly draw it, and you can see. There you go. There's 2.5 R, so that'd be an acceptable trade. And obviously, this is just me scribbling on the screen. And like, if you go from bottom to top, that's only 69k roughly, up to not even 71. So that's not a big move. It's less than, you can see there. It's only a 1%, 1.5% swing that you're taking out of it. So this is not by any means unreasonable, and it's a positive R. 2.5 is good. Anything over 2 is acceptable. 3 is what you want to aim for. 2.5 is good. And you can see here, you don't have to catch the bottom or even anywhere near the bottom. You can wait for the confirmation that the bottom's in, get long, as long as you've got a good understanding of what a real bottom would look like, and then ride it up to somewhere near the top. Even if you didn't get out here, you could just wait for it to come down and get out on the bounce, the first bounce, right? So that's just a brief overview, by the way. It's not the actual lesson. Taking profit, how and when to take profit, we'll cover, and also a bit more of a psychological, emotional element in terms of changing your mind while trading, how to be mentally flexible, and how to not let mental flexibility turn into wishy-washy, flip-flopping. Very, very important concept to understand and to eventually master. So, to do this, I'm going to go backwards in the chart using the bar replay and actually live trade on higher speed. So I'll speed it up and live trade. Not live trade, but you know what I mean. I'll try and trade it as if it were live. Just a random piece of price action. Okay. So I've got no idea. I'm going to try and do this as best I can so I don't have an idea of what I'm trading. So I'll just try and really quickly put the bar replay down. Okay, and there we have it, right? So we've gone back to here. I don't have a photographic memory of what happens after this, so I hope it's as good as I can do, really. I haven't pre-selected this area, so I can make perfect trades or anything. I'm just going to imagine that this was live, and this is the 5-minute chart we're looking at. And I'm going to play it on from here and show you how I would enter, exit, and all of that. And let me see, if I switch to 15-minute, does it fuck me up? No, it's alright, I can switch through time frames. So what I would be doing in this scenario, I would go to a higher time frame, let's say a 1 hour. So we'll pretend we're scalping. We're scalping Bitcoin, so I would use 1 hour as my high time frame, and I would use the 5-minute and alternative, and also maybe a 1 minute as my low time frame entry triggers, etc. So jumping into here, what I would do first of all is get this down. Let me get my text box and pull up my rules. Or sorry, my 5 points I want to go through. So execution, where and how to enter. Well, first thing would be obviously getting your levels. So very simply, most obvious thing I do when I'm looking for levels is accumulation and distribution. So if we look backwards and I go through my previous examples, I would say to myself, well, we have here a low gets swept, break above the high that led to the low, and then retest and bullishly move higher. So this line now becomes a longer term support level. You can see when we broke down to this area, we touched off it, we swept below, we broke above. So first thing I'm looking at on the higher time frame is we're potentially doing an under over, which would mean that low. I could leave it as that low. I could also draw it this exact low, but you get the idea. We have low, we have the high that led to the low getting broken, and we're now potentially retracing. So where would I be looking to get long? Obviously looking to get long on this line. All right, so that's my rough setup for this trade, my basic setup. We'll go into a lower time frame now. Got that, and we'll play it on. And then we'll look at the execution parts. We know where to enter. Okay, so where we're entering is in this area here. All right, and I will need to go out of this so that I can turn on the demo trading. There we go. Or maybe I can just do it here. Sorry. Don't really use the demo trading much. I can just do it here, kind of. Yeah. So what I would do personally would be one on the line and one around here. Alerts. Oh, sorry, I don't need an alert. No, I need to buy one there. Now, do they work in bar replay? Maybe they don't. They're not coming up anyway. So let me see. I'll pause this and see, can I figure that out? Right, yeah, so as I hadn't really thought of, but which makes sense. Those orders just go in as like orders that are live now, so they're not much, they're no good. Won't be able to do it like that, but I'll just use lines because obviously that order is now trading on the chart as if it was live, so if it wouldn't get filled on the bar replay. But I would put my orders in here, so I would put one on the line. I'll put it just above so you can see it. In blue, make it the same as the typical FTX. And I would layer another one right here. So I had this low, which swept out, went higher, so we could also just come down as far as here, or we could retest the line. They'd be my two initial ones. That'd be 50% of my position. And I would look to add more when we confirm that the bottom is in, because as we come down, there's always a chance that, yes, we get these ones filled, but then we just continue on down. So I don't want to go fully in. I'd like to see us come down and just hold and just have low downside momentum, and I would then put the rest on wherever. I'd be happy to put it on here. I wouldn't have to necessarily see another under over pattern, although it would be nice. But basically just want to make sure and confirm that there's slowing momentum before doing that. Alright, so we've got our fake orders set. Now let's zoom out here. Oh, and that. Okay, let me drag these in here so you can see them. Alright, and let's play on the bar replay. I'm not sure how fast it needs to be. Let's see how fast this goes. Is that fast enough for me? That's alright, I'll continue. So, first thing will be where and then how to enter. So we know where, we're entering based on this being an under over. And then how, I've just covered. Entering layered bids, so putting 50% of your position on initially, and the other 50% just as soon as you've confirmation of low momentum. It doesn't have to be anything special. It doesn't have to do anything out of the ordinary. It just you basically just want to make sure that we're not going to nuke straight through on first go, alright? Then you'd be happy to put it on, because at the end of the day we're still scalping, so you want to get filled pretty quickly. Let's see, it's coming down now. Impulsed away. Starting to come back. So if I was live trading this, I would see this is the first impulse. You hear me talk about it a lot, where we get an impulse move. Alright, we'll pause. We get an impulse move here. The impulse move signifies that we're in a downtrend, and it's people like bulls are trying to take over. Generally, this first impulse is too early, and it retraces. We go deeper, but this is a sign that bottom's close, and that the next one will be the real bounce. So we're filled on two of them. As I play it forward, and I let another few candles develop. So before this candle, but let's say I would have bought, because these are 15-minute candles. After we had that wick down, we had this one, this one, this one. I definitely would have filled the rest of my position before this candle started moving up. Because what did I say I wanted to see was slowing momentum. So we wick down with a kind of lightsaber, funny candle pattern. Then we had a couple of bullish kind of just consolidation ones. So I definitely would have bought more there. So by this point, you say then we're fully sized. Alright, and so let's say on average we're fully sized at this line here. So we've got our stop loss set here, we've got our entry here. We're now looking at our upside target. Now obviously you would have done this beforehand. When you set your risk and your bids, so you know your risk and your bids, you always check where your 3R is first. That's what I do anyway. Where's my 3R? Is that reasonable to expect? Yeah, definitely is. Because if you look, we had a big gap down, we're doing a consolidation. You expect these gaps to get filled back up. So if this is the bottom, we pump to at least there. We're more likely go to take out these highs, or we go, to test this demand zone. So that's definitely a trade worth taking. So we continue on, now that we're in our hypothetical long. Alright, pause. So this gives a good example of in-trade management. So one of the concepts within that would be when to cut a trade. Alright, so within a trade, and I know I'm kind of skipping over number 2 and going straight to number 3, but this the way this trade is developing. Would I cut this trade now, or would I continue and leave it? Well, you've got to look at a few things. First, what are the signs that you've been seeing? So you have the impulse, which is a signal that we probably do want to go higher. We're getting impulses at the lows. So we have this big impulse. We then have another impulse here. We have another impulse here, and we keep going down as if we're selling off. But if you've seen any of my stuff about bottoms and how they form and they're rounded, I wouldn't be feeling particularly bearish at this point. I'm seeing enough impulse to the upside to make me think that we can go higher. So if you're considering when to cut a trade, you want to have an invalidation within your invalidation. So that is typically a lower time frame in which you go and view the price action and see what's actually going on here. So you can see here we get this move down, you get a big liquidation both ways to wipe out as many trades as possible. We retrace back up. We don't take out a high, okay? Important, with the wick there. We don't take it out and we start to sell off. This would be one of my signals that the top's not in, if that makes sense. If this had have wicked above here, grabbed some stops and then went lower, I'd be more confident in, I'd be more confident that we go lower as in, and more likely to cut my trade. But as we come right down to here, once we cross this black line, I certainly would be looking at my next, I'll be saying trade is getting close to being invalidated. Now it's still not invalidated. Obviously your stop loss is below here. That's why it's below here. And obviously you've got your wick here, which you're hoping is the bottom. So in an instance like this, I would say, okay, if we begin to trade below this level, I will then cut my trade. So I would be willing to cut my trade early if we take out this wick. Otherwise, to me, it's just a retest. And if we go out to a higher time frame, you can see that there's no reason to cut it prematurely until the market tells you. Especially in a trade like this where you've got your clearly defined risk. You've entered here and your stop's there. You're not that far from your stop. And in this instance, it's better to just let it run. You've set your stop loss at a very key low. Like this was a big impulse and a big long wick. That should hold. So even if this one gets taken out, that one should hold. So again, size up all the different factors. You've set your stop at a proper market structure low, a key low. So you have to let it ride. Play it on. You can see it wicks down below, it wicks down here. It tries to go, but then getting really choppy and trades down through. So we actually get stopped out on this trade, which is fine. Not all trades are winners. It wouldn't be a bad thing to show a loser or whatever. Where's my in here? And that one doesn't really show the importance of letting your plays run, because that one, you might look at that and think, well, you should have cut it. So it's obviously easy in hindsight. And I told you I was going back to an area that I don't remember. I actually traded this, and I think I actually traded it in the group. And I traded it well in real time, and I've traded it worse in the replay. But that being said, the long wick here and the way it moved after, that would always be a low that I would expect to hold. So we get wicked out. Pretty sure that was just a run of that, and we do pump higher. So this would probably give a good indication. Actually, we can now learn something else. So we'll delete that and delete this. So we've been stopped out in this hypothetical trade, but this only gives further confirmation that the bottom is in. because we're seeing this lot of chop, a lot of wild wicks both ways, but every time it goes lower, it's getting bought up aggressively. And we've taken out this low, which would have had a lot of stops resting beneath it. So now what do? Well, we've impulsed away, and pretty clear that we're going to go higher at this point. So where do we try and get back in? Because this does now become a valid trade where you've got a defined stop. So you've had the big long wick below before, and we've taken it out. So that's clearly a liquidity grab. So your stop's going to go here because you don't grab liquidity twice typically, especially when you give the fact that we've been grabbing it all the way. We've been setting lows, impulsing, and just wicking them. It's real choppy stuff. So you've got your defined risk here, which would be this low. You want a bit more confirmation, of course, before jumping back in. But then you'd be saying, okay, under overformed, so low, swept it, and now we're going to break back above this high, which led to the lowest low, right? So there. So next time we trade below that, I'll be looking to get in. So let it play on. So we trade down a bit, do we, or do we just go higher? You ready to buy anything? Yeah, so I'd start buying now. So I'd be buying. I'd let price develop. I'd wait for momentum to drop. So I would have bought some here below this. So I would have bought some in here. Let price develop. As soon as I see momentum slowing, there with that impulse, I'd then set a bid here. I wouldn't buy this as it's rising. I would set one here. All right. I would have had one here already. Which line was it? It was here. So that one's filled. And we're waiting for this one. So do we get it filled? Not quite. And then it impulsed away. So we got some of our position on at that blue line that's left there. So we managed to get filled. We got back in even though we initially lost, which is important too. It leads you to not don't be, what's the word? Not chasing. You don't want to be getting into a bad mental state over getting it stopped out on that. Just because you get stopped out there doesn't mean you can't get back in. By right, you could have got back in here pretty easily because it's like an under over if you kind of zoom out a little. But we managed to get back in. We've got our risk, our reward, our 3 hours up here, which will make us back the 1 hour we lost on the first trade. Well, actually, it was 1 hour, wasn't it? We filled the full thing. And it would give us, 2 more hours, so we would still make 2 hour profit in total. So we're in this trade, it's moving. All right, this one starts moving pretty quick because it's quite an aggressive short squeeze. So when to move your SL? So in this instance, after you do this impulse, okay, so with the stop loss movement, you don't want to start moving your stop loss up even when you've got this move here. You want to move your stop loss up on key breaks in market structure. So what would that be? Well, if you look at the key highs that led to lows, so you had this fake pump here that ended up leading to a low. That's a pretty important one to break. Okay. Just drag it there. We also have these ones here, which we've seen them being broken. So with them breaking, we're moving up. I still wouldn't move my stop loss here, but when it tags this and starts to consolidate, I'd say, all right, we've done enough now to confirm the bottoming in, because to my mind, we've put wicks in, wicks in. When it breaks up here now, the low that you're looking to get is going to be in this area, okay? Because if you imagine this consolidation, so we consolidate, we go lower again, we break higher. So if there's going to be a low, it's going to be like there, okay? It obviously ends up being a bit higher because it gets front run. But you can see that if it's forming the shape that you're expecting, it's not going to go the whole way down here. And it's not even going to it probably won't even go back to your entry point, which is here. So we can move our stop up to below this low, and that just gives us a little bit lower risk trade and helps us to manage long term, because the more of them you can do, the more diligent you can be with it, the fewer like catastrophic losses you're going to have. So that's how to move your SL. So move your stop loss on a break of market structure, basically. Okay, so on, let's say even on a 15-minute time frame, if you're scalping, learn what market structure is. Okay, learn how to mark your levels. You can do it whatever way best suits you, but the simplest way is to get your lows and then get the highs that led to them. So the high here, which led to this lowest low, I'll delete this, and I'll delete this and this. This high, this wick up here, that eventually led to the lowest low. So that's your first structure. Breaks here, and then decisively breaks here. Okay, so that's confirming the bottom. Doesn't confirm that you can move the stop up really, because we could still wick down. So then you want to go one level higher. Where's the high that led to this previous low? Okay, so we had this low, and then we had the main low. I wouldn't class this really as a low, if you know what I mean. It kind of comes in, breaks up and then straight down. I would say this was the low that then got swept by these lows. So this was the low. Where was the high that led to it? It was here. You can see this candle is the last up candle before the drop. Breaks across. There's your market structure levels. So when this breaks, first confirmation the bottom's in. When this breaks, bottom's definitely in. And we just then need to find safe areas to put our stop loss. So if this one is broken bullishly, and then this one is broken bullishly, this one should act as, at worst, it should be support. So if price comes down to this area, it should wick off it. So if it had to come down here, it should do no more than that. Well, that's a bit. It should do no more than deviate slightly below it. So if it's going to deviate slightly below that, this previous line that you have here from your earlier analysis, from back here, that certainly looks like a good area to put your stop. So you can do that by just practice, repetition. You'll spot these setups a little bit better and look at some using your market structure to move your stop loss and stuff. We'll play it ahead and we'll start to look about taking profit. Okay, so how do you take profit? Well, taking profit on a scalp is done in two ways. You can either TP based on, and I've just deleted that box, which I shouldn't have. Let me zoom. Right, let's just imagine this was our trade and this was our initial target, because this would have been a 3R, so this is where we want to get to. All right, and if we look at it, it looks reasonable because it's in the middle of a gap. If price comes up here, it should go the whole way up. So that's a nice, easy exit. So you can either decide that you're going to be the type of trader who takes his 3R, thanks the market, and runs. Remember what I said earlier, if you've this type of move and you catch your little snipe out of it, then you've done well. That's one type. So that's one type of taking profit, which is setting your 3R, seeing does it make sense, so you don't just go for 3R for the sake of it. Going for 3R here would show you that there's comfortable room for upside, so you can definitely get your trade, get it completed and get out. So you can be happy, finish your trade, all good. Or you can be in the moment trader where you're not going to sell until you see weakness. And that's probably the one that is best to cover in this kind of demo tutorial, because the taking profit at the 3R level is pretty easy. So all you need to do, if you're doing it at that certain level, which is whether it's 2R, 3R, or whatever you want, is to make sure that when you set that level, is it somewhere the price can get to without breaking key market structure bullishly. Now let me reiterate that. When you're scalping, you don't care if the market's going up or down, you're just trying to hitch a ride and make a trade. If price is down like this and it's looking bearish and it's bottoming out and then it starts to move up, the big mistake the traders make is they try and set their targets too high, when in reality, if you zoom out on this, sorry, you zoom out on this, it's a downtrend, okay? This might just be a complacency bounce before further downside. It doesn't have to go, like breaking above these highs is quite going to take a lot of effort and time. It's probably not going to happen quickly, because that would then mean that we're flipped fully back to bullish and the market's going like higher again. So that's not what you're trying to do as a scalper, because by the time it gets up there, everyone's euphoric and everyone's trying to get long, and you don't want to be long that. You don't want to still be in your long when they're doing that. You want to be selling to those people. Okay, so you bought when everyone was bearish. You want to sell when everyone's getting bullish. So where do people get bullish? Into resistance, typical. So 2 types. That 3-hour trade gets you out in plenty of time. That's fine. That's one you can do. Great. I'm going to delete that off. And I'm going to focus on the second one, which is just in the moment trading based on weakness. So this is very simple. Go to your 5-minute and trade a break of market structure. Okay, so we set a high. So each time you're setting highs, you want to mark them. And then you want to trade the breaks of structure beneath them. So we have the high here currently. So if this low gets taken, that's a market structure break. But it doesn't. We break higher again. So we set our new high. Okay, and wherever it ends up being, I'll just keep moving it as the high goes. So we're consolidating. And we're going to break down below this low, which would be your first mini trigger. Okay, there we go. We got a little breakdown. Now I'll pause it. So in real time, you would see this high led to this low, led to the highest high of this move. We then broke below that. That would indicate broken structure, and then you want to look at the retest of this level, okay, to see should you get out. Now, in real time, you would have seen that this broke down and reversed pretty quick, so there's a good chance it was a fake out before higher, especially given the overall structure of the market. But you're definitely looking to sell any weakness up here. So you let it play on. Okay. You're lucky in that it blasts through. If this had have just started trading around the line, you're probably cutting it out. It was blasted through, so we let it play on. That's a good example of a take profit where you don't have to stick strictly to market structure, because remember, it's a 5-minute time frame in an overall broader bullish move. But we're looking next for the next big signal that we might want to get, short or sell. There it is. Right, we've seen it now. Same thing. This low led to the main high, and we're also potentially doing a over under. Okay, so we have this. We have this low getting broke, only barely, but still getting broke. We're now coming up to retest the over under line, and we're also coming up to test the previous drop. Okay, so what you want to see then, when you play it on, is just at any sign of weakness, be ready to take profit. So we come up here. If we do anything other than blast through, you want to start getting out. So we come up, we fall back below. There'll be my trigger. As soon as we come back below, so we go up here, we go over this line, we go back under it, I'll be out. I'd have taken profit, and we'd have had our nice trade, ridden it all the way up from here to here, and then whatever happens next is up to the market. So we can let it play on. You'd have sold there. You can watch and see whatever the market wants to do. Does it go higher? In the end it does, but it comes back down again. Does it go higher again? Ends up hanging around. Whenever price gets this choppy up at a high and fails to break out cleanly higher and higher, it's usually a signal of close to a top. Price continues a little bit higher, but remember, you're not trying to get the entire move. Goes one more, looking pretty bullish. Alright, so you got out a bit early in the grand scheme of things. But then you break down fairly aggressively. And eventually, in the space of a few hours, we're back at your take profit level. And the market's not looking so bullish anymore. We've kind of broken that momentum onto the upside. We're now distributing, and we eventually go lower. So you got out in a good area. You didn't sell the Pico top, but that's not what you're here to do. And you've executed pretty well. Alright, so that's that. Let me end this replay. Go back to the present day where we're looking pretty good. That's nice. I'll be looking to get back into a trade here when we get off this. If I was live trading this, well, I actually am live trading it, but if I was trading it right now, you can see this nice rounded bottom pattern forming. It's not a clear like under over or anything, but we do have sweeps, setting lows, swept them, broke above, retested, now coming back up. What I'd be looking for on this is for us to hold the original drop, because typically when you get these leverage flushes, if that's what this is, we get the drop down like this, which wipes most people out. Then the rest of it is just kind of capitulation. It's like grinding down to make people panic and sell. So this is the true level to hold. You can see we've come down, popped up, down again. We flipped and held it and impulsed away. So I'd be willing to buy any downside on this next candle, setting my stop below the low and looking for a 3R. So let's say I get a bit of fill there, stop below the low. We go to 3R. What does 3R give us? That gives us to 69. That's pretty good because I think we go, obviously we take out this wick, we go over 69, we probably go to 70 or 69.5, so 69 would be a nice trade to get throughout that. Alright. And then, so we've covered execution, where and how to enter, we've covered when to move stop losses, we've covered when to cut a trade, so invalidation within invalidation, and also covered taking profit. And now we'll go with the last part, which is changing your mind while trading. Now, you've already seen me do it on this replay, which luckily was a piece of price action I didn't remember, and you can see that I was being genuine by the fact that the first trade we took actually got stopped out. So that's good. That didn't really show me change my mind. I kind of stuck to my guns with that one, which I still believe was the right decision based on the previous price action. But you do need to be flexible to change your mind while trading as a scalper or short-term trader when you're presented with new information. Good example is this setup here. So as we record this, it's the 9th of November. Obviously, there'll be people watching this in the future, but it's the 9th of November if you want to go back and look at the PA in future. But I've been live trading this, and if you want to go back to the group, Bitcoin thread on Discord, where I have covered this actual, my trading of this today live, I have basically believed this was a shakeout all the way today. So at no point did I flip bearish, but I did end up closing my trade here. Okay. Reason being that the whole way down, even though it was looking super bearish, sentiment was flipping bearish, everyone was thinking we've topped and we go much lower, I still believe that from what I saw on price action and on the flows, with order flow and the market, the tape, what's coming through on the tape, I was seeing a lot of spot buying or neutral spot activity and a lot of derivative selling. So typically that's people trying to short into a low momentum move. So you can see we're losing momentum. We're not really spiking down like we should if we're really bearish. And it's leading to price, not moving anywhere. So I still believe this is bullish, and I just paused the video a second ago to get back in. I've set some bids to get back into a trade here, so I am live trading this now. Reason being that even though I sold here, I'm happy to get back in here because I've seen what I needed to see from the market. So when you're talking about changing your mind while trading, I remain bullish throughout all of this. We got this wick down, and this was the bit that caught me out. Changing my mind was the right decision. Doesn't mean it was right, if that makes sense. It was the correct decision to make at the time, but it didn't turn out to be correct, or at least it looks that way. But what I was looking for when I remained bullish was we had a potential under over, which we had this low. We swept it out. We broke above that high. We then came down for the retest, and I not only remained long, I added more to my long here. And then when we traded down, we moved up, but then we pushed down again, and we pushed down, and we were trading here when I cut it. So I cut it early. I cut it before it wicked me out totally. Just based on the fact that with all these different moves that I've seen and some past price action, I was expecting the bounce to come when it did. You can see here it did push higher, and then it got rejected again and went down below, and then closed a 5-minute candle below my line, which made me feel, okay, that is a scenario that would, in general, not 9 times, let's say 7 times out of 10, that scenario would lead to taking out this low and then further downside. Whether it reacts after, I don't know. You never know, because that low could be the one that just then capitulates the market. So I cut it because my trade was in profit, because I had put most of my trade on lower, and I added a bit there, so I was still in healthy profit. So I decided to take my profits instead of giving them back to the market. But I said in the group too, pretty much soon after when we got up here, I said, oh, I might have sold the bottom. I'm looking for a trigger to get back in. So what would that trigger have been then? Well, with changing my mind, I was basically saying to myself that this was not an under over. We can now see that it was a pretty good under over, just with a little bit of deviation. So what's next? Well, I wanted to see us get back up to this level, and then I'm happy to enter. Don't really need much more confirmation than that. I wanted to just see us make low, high, higher low, higher high, higher low, higher high. So any higher low, I'm willing to buy, because we're on the microstructure and we're trending upwards. We're not in a downtrend anymore on that move. So I've set some bids beneath, and I've got some filled, and I'm also setting some below. Stop still below this low. Target 69. That gives me a 3R from here, right? There we go. Basically a 3R. That's plenty for me. And that'd be how I would live trade it, and am live trading it. So you can see from that you need to be willing to change your mind. You need to be flexible mentally, have the mental flexibility to jump out of the trade if it's going against you. Jump back into the trade if you get new information that presents that tells you that you should be, or should at least be considering getting back in. Because no matter no matter what downside there comes now, we've seen clear slowing momentum, we've seen clear support, people willing to buy at these areas. We've seen sellers. This was a pretty heavy sell-off, and it failed. We're breaking higher. So worst case scenario, we're going up to test this gap of the breakdown. Again, so in changing my mind, I look at my bearish order block, which is that last high. So we had this nice little move here. We had a break above. So this looked like a potential recovery. Not really, because it was a double bottom, but anyway, you know what I mean. We moved there and we broke above. We immediately rejected and then had a big sell-off. So this block is what led to all that. So this is my first target for us to retest. So at a minimum, we should be coming up to retest that. And if we want to be really conservative, we drag it down to here so you can see the bottom, the consolidation. And so what I'm expecting at a minimum is that we get a move up into here. And even if we nuke from there, put in our lower high, you can see on a wider time frame that would still look like a completed, down move. So that's fine. If that happens, then that's no bother, because if we see our distribution at this level, we still get a 1.39. Obviously not what you want. You don't want to be aiming for that, but we're still getting above 1. So if I hypothetically you put on 1,000, you're still getting 1,400, 1,300 back. So you're still getting more reward than your risk. Now, it's not a good trade. You would never take your trade for that. But with the price action and the move we're in and the bullish nature of it and the trend and the fact that we're, again, if you're not watching this live, as I record this is a retest of our old all-time high and a potential bullish break of that. So this is a super bullish move. Like our old all-time high, which we set a few weeks ago, was at 67.2, sorry. So just right here. And you can see we've traded above it today. We broke down below it, and we're about to break back above it and start trading again. So this all becomes a potential shakeout and deviation before a new all-time high. So if that's the case, we're going well above 69, and you've got a really good trade because you might be able to take. I might take 3/4 of my trade off at 69 and let the rest ride, because you never know, we might get 70, 71, whatever, and make it into a really good trade. So that's the idea behind it. You can see now it's moving for me. Obviously no guarantees in the market. This could just reverse now and go to zero, but the idea is not to be right every time. The idea is to make decisions that in totality over the course of time, with the probabilities that you learn how to calculate, leads to better decisions. All right. So that's how to change your mind, be mentally flexible while trading. Do not be bullish and bearish. Try not to be a bull or a bear. Not when scalping. Like macro, I'm bullish. As you see me, I'm posting all the time saying I believe we go higher before we go lower, but I'm ready to flip on a dime and go short. You need to be, as a scalper, you don't want to feel bullish or feel bearish, because then you'll be hesitant to short or long if it doesn't fit your bias. Okay, you need to be flexible to do both. I am seeing signs of reaccumulation here, so I'm long. But equally, if we come up and we run a high and we set any type of over-under, I'll be cutting that trade and I'll be hedging short. All right. So that's this lesson on trade management, how to trade, execution, stop losses, cutting trades, taking profit, and changing your mind. Thanks for watching.